Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my lines on the chart from last week so you can see what we talked about and how the market played out. And you can see that this horizontal line was the gap fill target that I talked about. I said that we would go up to test that line and fill the gap, and we did that. I initially thought we would pull back a bit, but we continue to go higher, breaking through that line, and now we have 6 consecutive green candles in a row. That's called a stale green light. Let me erase my lines here so you can see where we could make the forecast for next week. If you look back at the history of the Dow, you'll see that it's rare for the market to go up that many days in a row with green candles before seeing a red candle. So here too we had 5 days of consecutive green candles. Now we have 6 days of consecutive green candles on a higher volume. Now what the higher volume means is that the buyers are still in force. And we have to weigh all the evidence now, because right now we have a resistance point right there from the high, which was from December 29th of last year. So what I think we could see is, I think we'll see a little bit higher going into next week. I believe that we'll hit that resistance, pull back from resistance, and you'll probably see a drop in volume before we start to go down. So that's my forecast for next week, and let's move on to the spiders. That's ticker symbol SPY. It's the S&P 500 ETF, and you can see again I left my lines in place saying that we would go up to fill that gap. We did that by Wednesday actually. Thursday and Friday we went a little bit higher, and the volume is still going up. Again, we have 6 consecutive green candles in a row. So what I'm going to do is erase all those lines and then draw another resistance line right here at that high, again from the 29th of December. I'm going to draw that as a horizontal line right there. I think that we will pull up to that line, test it before pulling back. Now we'll see a strong pattern here where before the market will start to reverse, you'll see a drop in the volume. And it's important that you keep an eye on volume, because when you see a drop in volume when the market is going up, what that means is that the buyers will start to weaken before we start to pull back. Remember, a simple idea behind a reversal in a trend is that if the market is going up, before it goes down, it will have to stop going up. So the buyers will show a sign of weakening before we reverse, and that is all found in the volume. So keep an eye on that. Now if we look at a more broad-based index, that's the Russell 2000, you'll see that again the lines I drew from last week were perfectly in place. I said that we would go up. Look at that, on Friday the close we went almost exactly to that high. We haven't pulled back yet, but there's a good chance that we could do that, because like the other markets, there is a resistance area. The only difference is that this former support, once broken, turns to resistance. That's called role reversal. Again, here, support, you see the bounce. We broke down below support, so the floor will then turn into the ceiling. I think that the Russell 2000, like the other markets, can go up just a little bit before we pull back a little bit. So that's the lines that I'm going to leave for next week as well. Now the last index we're going to look at is more or less representative in this Qs. That's the power shares, QQQ. I said that we would go up. We did go up. There's still a gap that needs to be filled up here, so what I'm going to do is I'm going to remove those lines, and I'm going to keep this horizontal gap fill point in place. I think we could go up just a little bit before we pull back, and I think that we'll see more or less that happen with the Qs. Keep an eye on that volume. The volume is going up, but that's red volume. You could see a little bit of a reversal in the Qs, more so than the other indices that we've mentioned already. So the Nasdaq market is a little bit different. We have small cap stocks generally found in the Nasdaq, large cap stocks more in the New York Stock Exchange, but these are all going to play pretty much simultaneously. One follows the other, and then when one breaks, we have a domino effect. So you really need to keep an eye on these major indices before you make any calls in your own account for trading individual stocks. Now finally, the VIX, that's the volatility index for the S&P, ticker symbol VIX. I said that we would pull down to test this support level. We came right down to that line just like I said we would, and now there's a doji. Now I'm going to erase these lines right here because I can draw a new support level mainly from the low down here. I'll draw that support level. We could see a retest of that before the VIX starts to go up. So I'll draw it like that. Boom, boom. And remember that the VIX is a contrarian indicator to the S&P. So if we go down a little bit in the VIX, that means we can go up in the S&P. And if we start to move up in the VIX, that means we'll move down in the S&P. So keep that in mind. This is a leading indicator that you want to watch and put on your watch list. And that's our market report. Now finally, on Monday the 21st, we're having a Q&A open house session. If you go to the Market Guys front page, you'll see that there's a registration link right there. All you have to do is click on it. It'll bring you to the page where you can put in your name, email address, and such, and then it'll reserve you a seat. It's a free event. Invite your friends. We will analyze your stocks. We'll answer your questions. And it's an action-packed hour that we do once a month. It's very enjoyable. You'll learn a lot. And we'll see you on Monday the 21st. So have a great rest of the weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.